California is on fire again. The flames are unstoppable, the damage unimaginable, and the aftermath a financial nightmare. Beyond the destruction of homes and the tragic loss of lives, there's a deeper crisis unfolding. The real question isn't just how we stop the fires, it's who pays the price and whether we can recover at all. In January 2025, California's wildfire season has reached catastrophic proportions. The Palisades fire alone has burned over 21,500 acres, destroying homes, businesses, and lives in its path. Over 5,300 structures are damaged or completely wiped out, and more than 150,000 residents have been forced to evacuate. Tragically, at least 16 lives have been lost, a number that could rise as searches continue. These wildfires aren't just seasonal disasters anymore, they've become a grim part of California's identity. Over the past decade, wildfires in the state have grown larger, deadlier, and more destructive. 2020 was a turning point with a record-breaking 4.3 million acres burned statewide. This year, experts warn, may surpass those numbers, and the state's response has been costly. In 2024 alone, California spent over $5 billion on firefighting efforts. This doesn't even account for the billions more needed to repair infrastructure, rebuild homes, and aid affected communities. But as firefighters battle on the front lines, another battle looms in the background, one that could cripple families, industries, and even the state's economy for years to come. The economic impact of these wildfires is staggering. Experts predict total losses could climb as high as $50 billion. These costs include direct damages to homes, businesses, and infrastructure, but also extend to the ripple effects that disrupt entire industries. Take agriculture, for example. California produces nearly 2/3 of the country's fruits and nuts. But this year, wildfires have wiped out thousands of acres of vineyards, almond orchards, and citrus farms. These crops aren't just a source of income. They're a cornerstone of California's $50 billion agricultural industry. For farmers, the fires mean years of lost revenue, expensive replanting efforts, and the possibility of losing their land entirely. It's not just farmers who are feeling the heat. Local businesses in affected areas are struggling to recover. Small restaurants, retail stores, and tourism-dependent businesses have seen massive losses as customers flee and tourists cancel their trips. Tourism, which generated over $100 billion annually before the pandemic, is in steep decline in fire-prone areas. Major attractions have been shuttered, and popular destinations like Napa Valley and Yosemite have become no-go zones during fire season. And then there's the cost of rebuilding. Homeowners face skyrocketing costs for construction materials and labor, driven by shortages and supply chain disruptions. Rebuilding just one house can cost upwards of $500,000, if you can even get the permits. If rebuilding after a wildfire is a battle, then insurance is often the front line. But for thousands of Californians, that battle feels impossible to win. The state's insurance crisis has reached a breaking point, leaving homeowners without coverage, facing skyrocketing premiums, or mired in red tape. California homeowners are increasingly finding their insurance policies canceled or not renewed. Since 2019, over 1 million properties have lost coverage due to wildfire risk, forcing residents to turn to the state's FAIR Plan, a last resort insurance program for high-risk areas. But even this safety net is crumbling under the pressure of repeated disasters. For those who can still find insurance, premiums are skyrocketing. In wildfire-prone areas, annual premiums have jumped by as much as 200% over the past 5 years, making coverage unaffordable for many middle-class families. Some insurers are even requiring homeowners to invest in costly wildfire mitigation measures, like defensible space or fire-resistant roofing, just to qualify for a policy. While these measures can reduce risk, they come with a steep price tag, often tens of thousands of dollars. For many families, it's a cruel choice. Take on debt to protect your home or risk losing everything in the next fire. Meanwhile, the insurance industry itself is struggling to stay afloat. In 2021, insurers faced over $13 billion in wildfire-related claims. By 2025, that number has ballooned to over $20 billion. Some major insurers have simply pulled out of California altogether, leaving fewer companies to share the risk. In 2023, 3 of the largest insurers in the state stopped writing new policies in wildfire-prone areas. This left thousands of residents scrambling to find coverage, often at much higher rates. Critics argue that these companies are prioritizing profits over people, abandoning the very communities they were meant to protect. Consumer advocacy groups are calling for stricter regulation of the insurance industry, demanding transparency in premium hikes and more accountability for companies pulling out of high-risk areas. But insurers argue that without significant reform, they simply cannot afford to operate in a state where wildfires cause billions in damages every year. For homeowners left behind by private insurers, the FAIR Plan has become the last line of defense. But this state-mandated program was never designed to handle disasters of this scale. Coverage is capped at $3 million, far below what's needed to rebuild many homes in California's high-cost housing market. In places like Los Angeles and San Francisco, the cost of rebuilding a single-family home can easily exceed $5 million. For those relying on the FAIR Plan, it means recovering only a fraction of their losses if they recover at all. Then there are the heartbreaking stories of families caught in the system. Take the Garcias, a family from Sonoma County who lost their home in the 2017 Tubbs fire. After rebuilding, they saw their insurance premiums quadruple, costing them over $12,000 a year. When the 2023 Glass fire destroyed their home again, their insurer refused to renew their policy, leaving them with no choice but the FAIR Plan. "It feels like we're being punished for living here," says Maria Garcia. "We've worked hard all our lives and now we're losing everything, not just to the fire but to the system that's supposed to help us." In response to the crisis, California has introduced measures aimed at stabilizing the insurance market. New laws provide incentives for insurers to stay in the state while funding programs to help homeowners make their properties more fire-resistant. But critics argue these efforts don't go far enough. The reforms are a band-aid on a much larger problem, says one policy expert. Until we address the root causes of these wildfires, climate change, poor forest management, and urban sprawl, the insurance crisis will only get worse. California's wildfires are more than just a natural disaster. They're a social and economic crisis. Families are being pushed to the brink, insurers are struggling to keep up, and the costs are rising for everyone. But amid the devastation, there's also resilience. Communities are coming together to rebuild, and efforts are underway to create a more sustainable and equitable future. The road ahead won't be easy, but one thing is clear: the time for action is now. The question is, will we rise to the challenge or let the fires consume more than just our homes?